Hey guys, I was gonna talk about everything in the last video and stuff, but I think it's better if I split it up so I don't ruin anyone's if someone has any short attention span or anything, I don't want to just take away from that. I'm gonna split these videos up a little better from now on, so just 15-20 minute videos each time. But this one is gonna be particularly short because we already gone through each section of the cash flow statement. We're just putting everything together now, adding everything together. So basically, we've done our operating activities, right? We finished conducting our calculations for your operating activities. Activities. We did our investing activities, and we also did our financing activities. So we got our cash from financing activities, cash from investing activities, cash from operating activities. We got all that stuff. Now you may be wondering, what do I do? Is this it? Do I leave it? No, we're not done yet. So at every single thing, you're gonna have a next line. So we're gonna split up. How it works is you split up your operating activities, split up your investing activities, split up your financing activities. Next, we're gonna add or subtract any effect of exchange rates, right? Exchange rates. So let's just say these could be, we just add back we subtract out $1 for that. Let's just say this is like a small adjustment for cash we hold in other currencies, for example, right? And there's kind of like a loss or an addition of cash there, here and there. It depends, but there's going to be an addition or subtraction of your effect on effective exchange rates, whether it's a dollar, yen, or whatever it is, right? And then eventually, if we add and subtract all this stuff, right, we have our 236, our 88, negative 88, and our negative 10. What we're going to get is going to be $137, right? And what that is our net change in cash. That's basically what it is. And basically you add the three sections in the currency line and make sure to account for this one as well. And this is how much the cash pile basically moved: 236 minus 88 minus 10 minus 1, and you get 137. That's your net change in cash. And you're not done here, because a lot of people make the mistake and just leave the net change in cash. What you got to do is you take the cash we started the period with, right? Say you started the period with $100 in cash, right? You're gonna have to add that cash back. So you start off with the last period's balance sheet, you see how much cash they have, and you add that to your net change in cash right now. So you take the $100 and you add back your $137. So you're gonna get $237 in ending cash balance. So you have your start plus the change, and this is kind of the exact number that becomes the cash line on the new balance sheet. And this kind of loop starts going around, and you're going to see this happen a lot. And that's kind of like the main thing to look at, because all these statements connect in some way or another. And I'd say one rule to memorize is, when an asset goes up, the cash goes down, and when a liability goes up, the cash goes up as well, because you're taking on, for example, a debt instead, then the cash is coming to your company. Eventually, you're going to have to pay that back, but the cash is coming in. But if an asset goes up, the cash does go down in that sense. So that's it for the video. We covered all the basic accounting stuff. Now we're going to talk about the main connection between all three statements. So we'll make another video on that. Thank you.